How's it going, everyone? And welcome back to Continues ToTick. We now find ourselves in the last week of May 2021, which is nice, as earlier this month I remember saying, I just wanted this month to fly by, as beginning May 31st, I'll be on another scheduled 7-day break from work, which is now literally at the end of this week. Anyhow, here we are back this week for another video, finding ourselves continuing with the journey to reaching financial independence, and hopefully with the assistance of a dividend portfolio. It's the goal, right? I know it is mine. Along with this goal is the idea of documenting the journey of growing up a dividend portfolio, showing you all my own personal strategy over time, which is to show that a minimal, hands-on portfolio may work, or hopefully work. That's the idea. As I've shared before, I've done all of my research up front, carefully selecting a total of 51 holdings, and week after week, no matter the market condition, investing $500 into this portfolio. And in simple terms, yet complicated enough in terms of actually executing, my strategy is to touch my portfolio the least amount as possible, not selling and just holding these companies for the long term. And when I say long term, I mean long term, not 6 to 10 months long term or 2 to 5 years long term, hopefully not even 10-year long term. But the idea is to hold for decades on decades, and ideally for the rest of my life. That's the goal, which will surely get interesting from time to time, without a doubt in my mind. And recently, I think we all can agree, as a particular stock came up with some huge news recently, testing many people's portfolios. This example being AT&T. So just as others, I'm going to spend some time giving my superficial opinions on this situation as well, primarily as an example of tough times in which I think many of us will experience and go through when holding a dividend portfolio in particular. So let's begin. So as I was just saying, my strategy is to hold, never wanting to sell. I'm a dividend investor creating a dividend portfolio 100% for the objective for cash flow. For me, growth and stock appreciation will always be secondary. The quote-unquote gains will always be secondary, specifically as I never plan to sell any pieces of my portfolio. One thing I'm learning about the dividend community is that there is a variety, which is great, many following their own set path. But one aspect that does tend to stick out to me is that many say they invest for dividends for the long term, but many still sell for growth in the short term, meaning many still sell searching for a better buying opportunity, despite them choosing the long-term strategy, doing so frequently, which is not wrong, as everyone has their own structured investing plan, and a financial portfolio is very individualized in that sense. But doing so is not typical of a long-term investing strategy, if in fact those individuals are choosing to invest for the long term. Now, in addition to never wanting to sell holdings in my portfolio, unless I'm forced to, and I can explain the reasons I'd sell a company in another video, another big objective of my portfolio is to 100% stick to my investing strategy, which is, in my opinion, the hardest part of investing, and one I believe to be quite pivotal. It's pivotal and challenging in the sense that separating the emotion or overanalyzing from investing is far from easy, as it's continually tempting to jump onto the next big thing, where we hear everyone is making money. But we should always ask ourselves, was this or does this go with my initial investing strategy, the one that I initially chose? From investing in penny stocks, growth stocks, and crypto for the last few years, and I'll be transparent and say that so far that's been 5 years, approaching 6. The most important piece I've learned is that I will never be able to time the market, nor predict it. And the market always has a tendency to do what it wants to, and overreact or underreact. It may sell on rumors, buy on news, or buy on rumors or sell on news. Too many times than not, we are continually surprised by what the market does. Because truth is, if we knew what would happen in these markets, we'd all be rich and retired, backing up the truck, as they say, to each opportunity of making it big with our money. So for me personally, staying true to my course, no matter the situation, may, in my opinion, be the best play. This is of course with the caveat that you're invested into time-tested companies, those blue-chip companies, which many dividend investors I know invest into. Now, I bring this all up because here's where this all gets really interesting. When you have a proven blue-chip company, such as AT&T, do what it did recently, throwing us a curveball, this is where many dividend investors draw the line, and I can 100% see why. AT&T was supposed to be a solid dividend play, a dividend stock of dividend stocks. Many were holding this as they continually provided and promised their dividend. They had a dividend growth streak of 23 years after all, and many liked what AT&T stood for in terms for its investors. It is, or now was, the epitome of a cash flowing holding in many people's portfolios. But let me say this, In this particular scenario, I can see why people sold. A lot of faith was lost. And once a promise is broken once, and once a dividend streak is crushed, what makes people think it may not be broken again? How will this trust be restored? And how long would it take? And I understand there are many variables as to the reasons or potential reasons why AT&T ultimately did what it did. And some of these reasons include obtaining too much debt on the balance sheet, poor overall management, decision making in the past, maybe even maintaining an unattainable high dividend yield for too long. When it comes to me personally, when I ask myself, will I remain invested in AT&T stock or try to rationalize what it did? I simply ask myself this: was a dividend stock paying a 7% yield considered a high dividend paying stock? And as a long-term dividend investor, what do we often say about high dividend paying stocks? I also ask myself, what does AT&T provide? How long has it been around? What did it just do for its future? What will it continue to provide moving forward? Does it appear they want to continue to be around? And are they trying to remain relevant for the future? In summary, and very superficially, I must say, despite the numbers sometimes, there are the black and white or simple questions I do ask myself when I'm in doubt and simply don't know how to proceed with the stock, or even sometimes when choosing a certain stock. Now, sometimes numbers don't really matter, surprisingly. And AT&T unfortunately finds itself in this situation on my mind. And sure, a dividend cut and such a large business move does happen to be a gut punch, especially when out of the blue. I can understand many are upset about AT&T at the moment, and myself included. But in summary, I will also add, I'm not completely surprised, as AT&T knew they had to do something as they want to remain relevant, right? And as long as you remain diversified, it should not matter in the long term. This is why diversification is key. For me, no company ever makes up more than 5% of my portfolio. And I think I had AT&T at even less than that. I believe even less than 4%. And to answer the question, if you happen to be curious, yes, I'm still holding AT&T and plan to keep it as all things normal in my portfolio. When a company tests my limits, I focus mainly to the backbone strategy of my entire portfolio, which is to think long term and try to never sell. And I ask myself my very simple stock picking questions. In my opinion, a 7% dividend yield was too high, making it risky for a cut. I believe AT&T will still be around in the future. They're making moves trying to remain relevant. I also think what they did will position them better for the future. Their goal is still revenue, and for that alone, or a lack for anything else, I'm still holding on. But needless to say, I will keep more of an eye on it as we move forward. I can't survive too many broken promises, after all. And now to wrap things up, let's go ahead and jump into our portfolio review for this week. So here we are, as we continue to keep moving forward, as time continues to tick, right? Here we are in the Jesse's Cash Flow portfolio, sitting currently at $26,796. A little bit of progress since last week's video, and most of it is literally because I just continue to funnel it. Keep trying to dig myself out of these trenches from these last 2 to 3 weeks of how these markets have been moving. But nevertheless, here we are with a 37.40% return, which equates to a total gain of the portfolio of $4,138. And of this total gain, $336 is from earned dividends over time, and from market gain alone, we have $3,801. So overall, in the grand scheme of things, if we zoom out and we just look superficially at what the portfolio has been able to accomplish since starting it, a 37% return overall is pretty good. And despite what these markets have been doing these last 2 to 3 weeks, I would say we're in a pretty good spot, or a really good spot. As we can see here on the 1 week chart, it was a relatively flat week, but somewhat leaning towards a negative week, as we have a negative return of 0.39%, which equates to a negative $104 of the portfolio gain. And as you can see here, a lot of it is from a negative market gain. But that's how these markets have been going. And another interesting thing to point out as we're here for the 1 month chart, as I was saying about trying to dig ourselves out of these trenches, you can see here that if it wasn't for me funneling in money, our portfolio would definitely be in a decline. Because as you can see here, the markets have been good. I've been funneling, the markets have come back down. I funnel, the markets come back down. And as you can see here for the activity for this last week, here we are on May 17th, getting paid by Alliant Energy Corp, $2.16. Also on May 17th, getting paid by Procter & Gamble, $3.31. So over $5 earned in just the single day, which is pretty neat to see. And here we are on May 19th, funneling in the $500 just like we always do every single week with our snowball of $8.88. So close to $9 for the snowball this last week. So definitely no complaints from me there. So as we continue to keep moving forward here, allowing time to pass. My challenge every single day is just trying to remain with my strategy and not try to divert off course, as a lot of things can be tempting every single day, as you see stories, hear stories of people making a lot of money, doing alternative things, especially investing for growth and the next hottest thing. But here I am investing in boring old dividends. But with that comes a big peace of mind. And for me, that's one of the biggest reasons for me doing this, because I know I have hopefully time on my side. And even though it's boring, and I'm sure like you all, hopefully we'll come out winning by choosing this strategy and investing slowly, systematically, and smartly, utilizing time as our best friend. With that being said, I hope you guys have a good upcoming week. We'll make it through another 7 days. We've done it many, many times before, so I'm sure we can do it again. But until then, and until next week's video, take care.